When do you want to open up a company? Hey guys, what's up? Recently I opened up a company. I went from being a sole trader and I opened up a company. As you can see, here's my registration. It is called e-commerce consulting. That might be flipped backwards, so you might not be able to read that. But it's basically, you know, as you can see, it's from the Australia. You can see that logo. Yeah, so basically I went ahead and I opened up a company, so I'm no longer a sole trader. So in Australia, you can be two things when you sort of run your own business. You can be either a sole trader, meaning you're just running a business solely on your own. It's really simple. It's not really complicated. Or you could set up a company, and that's basically what I'm going to talk about on this video, because I want to bring you guys on my journey and keep you guys updated with everything I do, and hopefully there's some people who get to this stage and this will be able to help them out. So if you like this sort of content, be sure to like the video. On top of that, drop any comments below, because this topic definitely made me really confused, so I definitely want to help as many people out as I can. So drop any questions you have in the comment. On top of that, if you want to work with me one-on-one personally, apply for my mentorship application linked in the description below. And yeah, last but not least, don't forget to subscribe, because I'm dropping golden nuggets every single day. So let's get right into the video. The main advantage of opening a company is you get much cheaper tax rates if you go above a certain threshold. So as a sole trader, as you can see, if you're netting these numbers, here is the tax on the amount you net. So what I mean net is basically your profit after expenses, after Facebook ads, after influencers costs, after paying for Shopify fees, paying for apps. How much you net, that is how much you're gonna get taxed on. So if you say you net $20,000 in that year, then 19% of it will be paid as tax to the government. So as you can see, if you make over $37,000, the percentage that is being taxed is way more than the flat rate which being set under a company would be 28.5%. The downside of a company is you have to pay like $200-300 every year in fees. You'll need an accountant, and that's really about it. Whereas sole trader, there isn't any yearly fees. So if you're making above $37,000, you definitely want to set up a company. When you set up a company, you also have the options to have shares. Now that's something that my accountant recommended me. There's nothing wrong with having shares. Just say your company has 1,000 shares at 10 cents each and you own all of them. The good thing about this, it just makes it much easier. So if your company does blow up and you do want to sell your company, you could sell your shares that you have within the company. There's not many other downsides of setting up shares. Like if that's part of the setup process, you might as well, include shares within your companies and say that you own 100% of the shares that your company offers. So that's definitely something I'd recommend you to do as well. But yeah, that's about it. I just wanted to update you guys that your boy owns a company now, and definitely the main reason I'm doing it is just for the lower tax rate. That's the main reason I'm doing it. There's no other reason. Like I don't really care about shares. I don't really care about owning a company. Like the main reason I'm doing it is because it's going to save me on tax. My threshold, if you earn over $37,000, you're going to be taxed 3% less. Pause right there. Let me interject. So this was filmed quite a while back. This was like maybe more than a year ago. And over the past year, I've learned a lot when it comes to accounting. And I'll share you guys the updated version. I think over here, as you can see, I sort of talk about all these sort of tax brackets, the different percentages. But what I forgot to mention is that when you make, say, 50 grand, you're not paying 32.5% of 50 grand. Only every amount above $37,000, you pay 32.5% on that remainder. Let's say you make $50,000. On the first $18,200, you'll pay 0% in tax. Then from $18,200 to $37,000, you'll pay 90% tax on that amount. Then from the remainder, from anything above 37,000, in this case it will be 50,000 minus 37, so that is the remaining 13,000. That remaining 13,000, that's what is going to be taxed at 32.5%. After doing my calculations, company tax would only be cheaper when you make more than 150 grand net profit. That being said, if you have employees or you sort of hire your family members or you pay yourself, that can reduce your tax drastically. Now that's exactly what I'm going to do in this part. So here's a calculator that I made. If you guys want to go ahead and replicate this, here's a time lapse on how I created it, just to show you guys that I know how to do Excel. I'm not copy and pasting this from someone else. I made it. Like I made this calculator, and I'm very happy and impressed with it because this calculator is going to save me a lot of time. And I just want to show you, as you can see, like I know how to do Excel, and to be a successful entrepreneur, you have to be a full stack entrepreneur. You have to know a bit of everything. Like I'm not a master Excel, but I know the basics of it where it can help me a lot. I know the pretty basics, like I know a lot about accounting. Now I don't know the over scope, like the bigger picture of it, but I have a decent amount of knowledge when it comes to accounting. I have a decent amount of knowledge when it comes to Facebook ads, branding, creative, editing photos, editing videos, and this is needed when you want to become a successful entrepreneur. Like Elon Musk knows the science behind building a rocket. That's sort of what differentiates an amazing entrepreneur versus a good entrepreneur. An amazing entrepreneur knows a broad amount of things. Now let's get into this. Here is the chart. So let's do it easy. Let's say you make 75 grand. 1, 2, 3. Let's make employee zeros for now. Let's say you made 75,000 and I put that all under personal. Now again, if you're in a different country, all you have to do is just change the percentage, change your brackets. Like this is edible. You saw how I opened up a website of the Australian tax brackets and I just sort of put it into here. If you're in a different country, just put in your own tax brackets. So if I just put $75,000 under personal income as a sole trader, I would pay $15,922 in tax. Now, if I earned 75,000 and I was a company and I put that money underneath the company, I would actually have to pay 22,500 in tax. So company income, the tax on company is only going to be cheaper because look, if you go up to 90,000, 1, 2, 3, 25, and if you put 90,000 here, personal income is cheaper. The tax on personal income is cheaper. Only until you go up to 180,000, the personal income tax is 54,000. Put in 0. The company tax would be 54,000. So you have to make more than 180,000 net to make it worth it to set up a company. Now that's sort of what I thought. I was like, oh shit, like I'm gonna have to make a lot of money to make it worth it. But I forgot, as a company, you can pay yourself. So let's say we make 180,000. I could pay myself 18,200 because I pay zero tax on 18,200. Now I could actually pay myself up to $37,000 because until 37,000, 19% is much less than the company's tax of 30%. So if I pay myself $30,000 and I leave $147,000 in the company, it goes down to $46,000. If I go ahead and hire my sister and I pay her a contracting fee, or I make her an employee and I pay her $37,000, the tax drops down to $38,944. Now if I go ahead and hire my other sister, or I hire my mum and I pay them another $30,000, now my tax drops down to $31,000. I brought it from $54,000 down to $31,000, and that's something you cannot do as a sole trader. Now, before I finish this video, I'm actually going to go ahead and email my accountant and ask them, as a sole trader, I don't know what that's in other company, like as a sole business owner, am I able to pay employees or pay contractors? Let me get back to you. Alright, so I just came back from a consulting session with my accountant, paid a lot of money. I'm going to give you guys everything I learned completely for free. Got a bunch of discoveries and sort of learned why a company is much better than a sole trader. Now, let's ignore the fact that, first of all, I discovered that both sole trader and company can both hire employees. So that's exactly the same. Now, if you have personal income, so let's say the total income was 50,000. Personal income was 50,000. So I'll pay $7,797 in tax. Now, if we made 50,000 under a company, the tax is much more. But as a company, you can pay yourself. So what you can do is you can pay yourself 37,000. 1, 2, 3. And the company pays only 13,000. So the tax is much cheaper. Before it was 7,797. Now it's 472. So you can save like 300-400. Wow, I'm getting a bunch of cool inquiries I want to ask. I think like if you make, for example, 80 grand, for example, 1, 2, 3, you'll pay 16,475 using this structure. Now if you're a sole trader and you have to pay everything under personal, you'll have to pay 17,500. So in that case, you save nearly $1,000. So that means the moment you get past 37 grand, having a company setup will be cheaper than having a sole trader setup, but it's not by too much. Like at 80 grand, you're only saving $1,000. For example, having a company, you're already paying $200 a year. Plus the accounting fees, I'm pretty sure, are more expensive. So you gotta make sure you're making a decent amount to make it worth it. So yeah, that's what my discovery is. I just want to add this in because this is updated information, how and why a company is important. I think, you know, once you're making more than 50 grand in net profit, that's sort of when a company structure will save you a lot of money. But yeah, that's sort of the update on all the information. I know, you know, I've been focusing a lot to understand finances and everything, and that's sort of all the extra information that I learned. I'm just passing on to you guys completely for free. So yeah, if you guys enjoyed today's video, all I ask is for you to simply hit the like button, hit the subscribe button. Like, I don't charge any money for any of this, so that's all I ask. So question of the day, is there any accounting tips or tricks that I've missed out? Put your answers in the below. Other than that, just give me your thoughts on, hear your advice. Yeah, I'll be seeing you guys tomorrow with much more value. Peace.